In this video, traders, look at my golden rule for trading counter trend. Stay tuned. Hey traders, a very warm welcome to you. Thank you for joining me. All right, so my golden rule for trading counter trend markets. Now, this is really a rule that I do have as something that goes through and runs through, ripples through all of my trading setups. It's something that maybe you do already or something that might be quite new to you. So if you think about trading trend versus counter trend, now what I don't want to do, and I've always said this, is that if we've got a chugging trend, i.e. a grinding trend, I never want to try and pick the top with that. I think that's very challenging to do. You don't have the edge of kind of exhaustion of that price action move. It's just plodding, very challenging. So I always kind of put those out the window. What I'm talking about here is if you're trading either an extension and you're looking for a trade to come back to a mean, or you're trading for a full reversal. But bearing in mind, if you're always going for the full reversal, you're going to get stopped out a lot. So you've got to use a lot of mean reversion type stuff as opposed to a trend type trade. So in a trend type trade, you've got the wind behind you, okay? And if you're aligning yourself with that trend, it can forgive a lot of errors. In other words, you can be trading, get your entry wrong, and it forgives you. Imagine this kind of uptrend here. You know, if you're buying a little bit late in the move here, you haven't got to sit through much of a pullback before it carries on and forgives you. So if your worst case scenario entry, I appreciate this is just for kind of illustration purposes, but you know yourself, right? A trend will forgive a bad entry. So you can buy whenever within reason. Now, obviously, of course, we're trying to fine tune that, and that's a bit of a sweeping statement because if we're there and our stops there, we're going to get stopped out, etc. And of course, we can have deep movements, but you get the point. You know, you don't really, if you've got the wind on your side, you're okay, roughly speaking. Now, however, trading counter trend means that your face gets ripped clean off if you are slightly wrong. It's a very delicate balance. However, it can offer a very lucrative opportunity when the timing's right. The difference between trading trend and counter trend is that trend, you're going to get multiple occurrences of a kind of mediocre type trade, in my opinion. Of course, if you catch the trend early on, a big monster trend's far from mediocre, but you get the idea. Counter trend, however, is a little bit of a different skill set, but if you can fine tune it, you can get those stretches, you can get some nice high probability, in my opinion, kind of contractions back to a mean. So what's my golden rule for trading counter trend? Well, it's very simply this. If I'm trading against an uptrend, I will only sell on green. So what does that mean? So in other words, if I am looking to go short here, right? Let's imagine we are looking for a mean reversion back to a VWAP, a moving average, etc. Now, I'm probably not going to just stab at it for no reason. I need a few reasons to take the trade anyway. So perhaps we've come up to a prior day's high. Perhaps we've come up to significant resistance from a while ago. Perhaps we are a time of day that I quite like a reversal pattern. Perhaps whatever. There's got to be some reason. I'm just guessing at this. So there's some other reasons, but forget about that for now. Let's look at this golden rule. I want to only be selling on green. Why is that? So what I mean by selling on green is that I want to be selling into moves up, wherever they may be in the chart. So if the price is moving upwards, and I say on green obviously because the default setting for candles is green for up, red for down. So I want to be selling on an up move. I want the price moving up to my entry as opposed to selling on red, which would be selling into lows. Now, if you imagine, let's do a little kind of chart here. If you imagine a heavy downtrend, then I can sell into red quite happily because I can press into breakouts, I can sell into moves, I can chase moves, and because the wind's behind me, I'm okay, which is why I earlier alluded to the fact that you don't need to perhaps worry about selling on or buying on green here, which would be chasing the trend, or buying on red. You know, buying on red preferable if you can fine tune it, but the opportunities are limited. However, I'm trading counter trend. My golden rule is I don't sell into red, I always sell into green. So what does that mean actually operationally? So it means that if we had a move down here, I'm not selling into that. Okay, and my golden rule is don't sell into that because the chances are that this is going to pull back. You have to expect that from a trend. Now, we go into a trade expecting a nice mean reversion, fine, but we've got to expect that we're not clever enough to get the reversal of the trend. Okay, from time to time we're going to get it, and if we can sniff that out beforehand, that's great. That turns into a real jackpot trade for us. But we've got to expect we're literally trading a mean reversion. This thing is stretched, this thing is going to come back, and that's what I'm trading for. So trading on red is very dangerous because the momentum is up. The market's trying to push price higher and higher and higher, and you end up selling on red means that this thing could kind of drift up, do a little bit of this before coming back down, and you're very vulnerable then, because where do you put your stop? You've got to keep it tight because you're going against the grain. It's very challenging to do. However, if you sell on green, look at the difference that makes for you. Now, okay, if we'd sold on green here, yes, I appreciate this is, we're speculating that that was a signal for us. We've got a much better chance of success, even if, right, even if we're selling on green here, or even if, let me zoom into this for you. So imagine we come down and we've done this. Even if we're selling into these greens here, that gives us a much better chance of at least giving us a bit of edge. You see the difference between selling into the pops as opposed to selling into the drops, because we're looking at the overall bigger picture and thinking, hey, we're going against the grain here. We're trading mean reversion. We want that spring, should I say, to be stretched as far as it can be, and to try and judge where that is going to contract back. And for that spring to be stretched, you think about it, you know, you're trying to get the point where it's right at the turning point as far as it can and come back. Now, I'm not saying take this so literally that if it just ticks down 1 or 2 ticks from your level, you don't touch it. I'm saying, you know, you don't start chasing stuff down. If it's already driven low, you don't start selling into this kind of thing. You wait until the market's pushing up to your price, because that just gives you that little bit of an opportunity. And guys, this has kept me on the right end of stuff far better than chasing things. And you know, from my experience is that when you start trying to, because the trouble you have with the mindset is that you may have been there yourself, and this is from an intraday perspective, but you may have been there yourself when you see this happen. You've kind of, you're not on the long side, or you've had a few long trades, you're now looking for shorts. The market's pushing up, the market starts to rotate down, you start to think this is the end of the trend, this is going to roll over, I want to get on this, etc, etc, etc. And of course, as it starts to come lower, you then think, well, that's the turn, and then you hit short. But in reality, guys, you know, as I've talked about a couple of times in other videos, is that's actually a nice long setup. The first deeper cycle lower ends up retesting highs. So there's one reason why we don't sell into it, because all you're doing is selling into the dips that people are with institutional money are buying into. Now, it's fine to be able to sell into these little spikes and perhaps start to take some off on that mean reversion, because this itself is mean reversion. This is mean reversion. We're not always expecting a full rotation back. We're going to try and time it to get that, preferably maybe look for a tired trend, etc., all things we put together for that. But the point is that, you know, if we're selling into red on a big downtrend, we're really dicing with death, so to speak, because that's when prices tend to find bids and lift up, and history has shown us that. So the best thing for me, guys, or my golden rule, is that, you know, if I'm trading counter trend trade, mean reversion type trade, like I say, never step in front of a chugging trend. But if we've got some opportunities where we're getting extensions that are unwinding, maybe let's say right time of day, etc., I'm always looking to sell into green, or I'm looking to buy into red if I'm trading against the trend to the downside. A little bit more cautious, what's one thing worth noting actually, a little bit more caution required for downtrends, because those flushes on the red tend to be a lot more aggressive than kind of pops exhaustions to the upside. You know, those real red flushes, you often get 2 or 3 moves lower to the downside than you do to the upside. The upside kind of has a crescendo, bit of volume spike, and then just kind of lolls around a bit and maybe unwinds and starts to chug lower. Downside, generally, I've been generalizing here, generally speaking, you get a hammering, second, third legs, then a snapback, then maybe a consolidation, then maybe a snapback, then a push lower. It's much more jagged and different. So you got to adjust and tweak things a little bit. But that's my golden rule now, guys, for trading counter trends. Selling on into green, I'm buying into red. Take care, guys. Bye-bye.